Thanks, Aisha. Good evening to all of you. Today, we have with us from Muthoot Finance, Mr. George Alexander Muthoot, MD and CEO, Mr. Oommen Mammen, CFO, and Mr. Epen Muthoot, Executive Director. We are sitting at a very interesting situation where gold prices are at all-time high. Demand is also very strong, and RBI has increased the LTV only for banks to 90%. So without any further discussion on this, I will hand over to Mr. George sir to take us through the quarter and what the environment looks like. Over to you, sir.
Thank you. Good evening. This is George Alexander Muthoot, Managing Director. I have with me our CFO, Mr. Oommen Mammen, our Chief General Manager, Mr. K.R. Bijimon, Executive Directors, George M. Jacob, and also Epen Alexander here in Cochin. Some of the other directors probably would be joining from their own locations. So, good evening once again. This morning we had our Board of Directors meeting, and we are pleased to present the results for the quarter one. The consolidated AUM has increased by 16% year on year to 46,501. And the consolidated PAT has increased by 52% year on year to 858 crores. As far as the standalone is concerned, it has increased by 15% and stands at 41,296, and the standalone profit has increased by 59% and stands at 841 crores for this quarter. The consolidated assets under management, I said, we have increased by 16%, and our branch network continues to be the same, 5,330, and Muthoot Finance has contributed 40,000 of the Muthoot gross loan assets under management is 40,906, and the subsidiaries constitute 5,595. As far as the profit of the company is concerned, Muthoot Finance contributed 834 crores and the subsidiary 23 crores. The Muthoot Finance, we have given a growth indication of 15% for this current year. Although the first month was not very good, rather the last 10 days of March and also the April month we were closed. Most of the branches were closed, but from 1st of May, or rather end of April onwards, our branches got opened, as I said last time. So now, in the last 3 months, all our branches are functioning, all our staff are coming to the office, and things are back to normal. So we have given a 15% growth projections for the 2020-21. So we are sure that we will be able to achieve that 15% growth for the whole year. And as far the target is concerned, because of this COVID issue, we combined the internal targets of growth. That's not for this, but the internal growth target, etc. We combined the Q1 and Q2 and made it a H1 target. And we feel, as it stands now, because we see very good growth in the AUM in the gold loan business, we will be achieving the H1 target also by the end of next month. So, as far as Muthoot Finance is concerned, the growth is on target. The profits and incomes and collections, etc., are normal. Since we don't have any EMI problem, we have not had any issues with people asking for a moratorium. So that is behind us now. And but as far as the moratorium is concerned, what we have done for our customers is those loans which have crossed the 12 months and which should have actually become an NPA, would have become an NPA, etc. We have not been doing any auctions. But having said that, there is no point in doing any auctions now, because all these loans which we see as an NPA today, which is beyond 12 months or 12 months plus 90 days, if we auction the gold today, we will get much more than what is realizable, what is due to us, and we will have to do a refund. So in that case, we also felt that we need not do even without a moratorium, we did not do an auction now because having to auction a gold and then returning money to the borrower looks very painful. The first question he would ask is, why did you then auction my gold? So as long as we are in the money, we have not done the auctioning, and that takes care of the moratorium issues also. So that's as far as the gold loan business is concerned. As far as the subsidiaries are concerned, where we have around 12% of our portfolio in the three main subsidiaries of the microfinance, the home finance, and the vehicle finance. As far as vehicle finance and home finance are concerned, we are going slow. Rather, our disbursements are almost near nil. Only collections have been happening in these home finance. Probably we will wait for the end of the moratorium and see how customers are behaving after the moratorium in September, October, and then restart the lending. So as far as today, all the staff available with us are into the collections. They are doing actually in this period also, they are doing reasonably good collections in both these subsidiaries. As far as the microfinance is concerned, they have already started slowly lending, and probably in the next 2-3 months they will be back to normal. And from what reports I hear from not only our microfinance, from the microfinance industry as a whole, is that next 2 months, 3 months, disbursements will come back to normal. So these are the subsidiaries. So hopefully by the end of this year, our gold loan growth should be very good, and that will bring down the proportion of the other loans. So other business, which is today 12%, I think may come down to about 10 or 9% by the end of the year, because gold loan will be growing well. The others may have very, very slow growth, etc. So that is the growth prospects. Otherwise, we have been able to do well in the digital space. We have been able to convert quite a lot of our customers into online transactions. Earlier, before the lockdown and the pandemic, we had about 19% of our customers transacting online. Today it is more than 40%. We actually doubled our customers who are transacting online, either for payment of an interest or payment of some part of the principal or taking more money on their loans. People, please remember that our customers are very small value customers, average of 50,000 only. There are 10,000 rupee customers, 15,000 customers, but our staff during the COVID period were able to actually, sitting in their home, etc., they were able to link the bank account to the company's bank account and the loan account, so that it made transactions easier. So we were able to link about 10 lakh accounts during this period, which was one of the reasons we were able to increase our online business. Today, even other than that, we have to. So today, for a customer to take a gold loan, he has to come to the branch. Once he has to come to the branch with the gold, and for taking it back also, he has to come to the branch. All other things actually he can do online. But again, taking the business more to the customer's house or customer's place, we have started a new vertical, which is loan at home. So if a customer wants our people to go and meet them in their house or business place, so generally it is a house, and collect their gold, etc., we will go there. Our people will go, our appraisal staff, or our managers, etc., will go to the house, collect the gold, check everything, and bring it in very sealed packets to the branch. And before leaving the branch, before leaving the house, they would be able to transfer the money also to the customer. That is now started. It is having good traction. Of course, that we will be doing only for bigger customers. Probably at present we look at it only for customers with more than 2 lakhs. So it should be, because it's little expensive also from our side. But still, it is a good service we are doing for the customers. So we have also launched another product, which is the gold unlocker. That means the the gold which you have kept locked in your locker somewhere in your house or in some bank, we are actually encouraging customers to bring it to us. We will value it for them, we will test it for them, and we will keep it in our locker, which is also insured. The money, the gold which they keep in the house or bank locker is not insured. Here it is insured, we can keep it and they can take loans, avail loans whenever they want on this. These are the two new initiatives which we did. And the last one which we did recently in the last couple of days was giving a free insurance cover to all the new gold loan customers. So that we are giving free, probably charging a 1 rupee nominal money, but then it is giving free. We give up to 1 lakh cover for COVID people who are affected by COVID. We have tied up with insurance companies for that. It has started from Monday, and it is definitely being well appreciated by all our customers, and we feel that during this pandemic, it is one of the best things we could have done for our customers. I'm sure this will all go a long way in endearing the customers to Muthoot as a long-time customer, and giving back to them something which we are also doing. Also, on our CSR side also, we have been and continue to do quite a lot of CSR work for the pandemic COVID affected people, not only in near our branches, not elsewhere also. We are doing quite a lot of things, and we feel happy and of course satisfied that we are able to do these things. So these are the things which have happened, and finally we feel that our growth etc. should be on track, and next 3 quarters should be fine for us, and our business and our branches are normal. Our staff are also able to come to the branch and do their business and work and serve the customers. So with that, I would like to conclude, and I think we should be open for questions after this. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Goyal from ICICI Prudential Asset Management. Please go ahead.
Congratulations on good set of numbers, and thank you for the opportunity. I have 3 questions. First, what will be the impact of competition on large ticket loans, primarily because of the changing regulation on the bank side? Will it have any margin or volume growth in future?
Okay, please ask your full questions, all the 3.
This is my first question, sir. Then I'll ask the other 2 questions are not related with this.
Okay, please ask. I'll answer together.
Okay, fine. The second question is that in you have a nice presentation which discuss about the administrative expenses coming down. How much of the, say for example, there's a good saving of rent of about 98 crore. How much of those savings are sustainable? And third question is with respect to dividend payout policy. There's a continuous drop in the dividend payout ratio. How should we look at that number? Given you are already under-levered, which is a good thing from a balance sheet perspective, but we want to have clarity with respect to your dividend policy.
Okay.
So these are 3 questions which I want to ask.
Okay. Thank you. Competition. Competition has always been there for Muthoot and for the gold loan companies. Competition hots up, especially when there is a good movement in the price and there is lot of talk about gold and gold prices. This also happened in 2008 and 9, 8, 9 and 10, when the gold prices went up and the gold loan companies were doing well. Quite a lot of NBFCs, banks, etc. came for competition. But they were not focused or serious players at that time. After a year, most of them got back to their old businesses, and the focused players continued. Now also we see the same thing because gold prices have gone up, all other forms of lending, etc., are in difficulty. And today, banks are also definitely in the field for gold loan. But even otherwise, probably we cannot compete with the bank on the rate. But certainly we can compete with anybody else on the goodwill, trust, and also the speed of service, which is very critical for this, and that has been our mainstay for all these times. So banks having permission to lend up to 90%, etc. Probably they may lend, they may not lend. It's their whole decision. For us, we are comfortable with the 75%, but then we are only little pained that we were treated differently than a bank by the regulator. Other than that, we wouldn't want a 90% LTV because as far as our risk appetite is concerned, I don't think 90% is advisable. But then, even today, our average AUM is only 54%. The AUM on the book today, related to the price today, the average LTV is only, not AUM, sorry, LTV is only 54%. So we don't have big margins because any price which goes up can fall down also, only which goes up can come down. So since it is at a high price today, we have sufficient margin to take care of a reasonable or a good fall in the price. So as far as the competition is concerned, we are not very much concerned with that. About the rent, because in the first quarter there was lockdown, etc. So we did some negotiations with the landlords, and there is some reduction in the rent which was paid for the quarter. But from a long-term perspective, I don't think that is sustainable. On the dividend, if you look at, the company has consistently been paying dividends since 2011 when we became listed. And every year, the absolute amount has consistently increased, and dividend per share has consistently increased. But of course, as a percentage of the profit, it is around 20%. The board has felt that it is a fair payout at this point of time. Nothing prevents us from considering a higher payout in the future, but that is up to the board to take a decision.
Thank you. Prakash, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. Also, we would request the participants to please limit their questions to 2 per participant. The next question is from the line of Anand Bhavnani from Unifi Capital. Please go ahead.
Thank you for the opportunity. I have 2 questions. My first question is on the level of liquidity. Now, the press release mentions that we had excess liquidity of around 8,500 crore at the end of June. Can you share the number for the quarter as a whole, the average number, because this is last date. Just wanted to understand what's the average liquidity for the quarter, and what was the average number for corresponding quarter last year. So I just want to assess how the COVID situation led to higher liquidity than in the past. So that is the first question. And second is, if you could give me the breakup of our microfinance book into GLG and self-help group, and whether you are seeing different levels of collection efficiency and stress in the JLG versus SHG side of the microfinance book.
Okay, on the liquidity front, definitely compared to last year, same quarter, we are at least 3 or 4 times in a better position in terms of liquidity, because the way the things were happening, we also felt the need to maintain more higher level of liquidity. So compared to last year, certainly the liquidity levels are higher. And
sir, by how much would it be? Can you quantify a bit? Like you said 3 or 4. So generally the liquidity levels is 2,000-3,000 crore, and currently we are like 8,500. Is that?
Yeah. So it was somewhere around that level in the last year, but now it is around 8,000 crores we have maintained as of June. During the quarter, average, there were outflows and inflows. So if you look at our presentation, we have been able to raise funding through NCDs as well as bank loans. So there has been a corresponding inflow as well as outflow in terms of the fundraise.
Regarding the microfinance.
Regarding microfinance, we have more than 60% of the portfolio is SHG, and the remaining is JLG also. Actually, we have renamed it as a Pragati because we took a year back itself. Some of the features of this SHG have been taken it out, and that has been merged into the JLG scheme. So today, our JLG is called Pragati scheme, which has got most of the features of SHG. So that's why, but we don't see a big difference in collection actually. It's a more or less same. It's more or less.
What would be the collection efficiency as of June end?
We have 70 years. In the initial month it was lower, but I think the last month, July, it was 70.
Consistently, the collections in subsidiaries, especially on Belstar, consistently the collections have increased. April it was quite low, but May, June, and even in July it has consistently been increasing.
July it was 76%.
Oh, 76% in July. Did I hear you correct?
Yeah.
Yeah. Thank you. I'll come back in the queue for additional.
Thank you. The next question is from the line of Chirag Sureka from DSP Mutual Fund. Please go ahead.
Sir, I have two questions. This is Vivek here. My first question is, you had gone upon the strategy of diversification into other businesses because it was seen that the growth in gold loan cannot be so sustainable. But now the other businesses are slowing down. So let's say we need this year, in another 2-3 years, how do you expect the company to be? That's question number one. Question number two is, you said something interesting about the value of gold which you have with the customer is so high that even if they're not paid after 12 months, you've not auctioned the gold. Now, when would it be a decision to auction or not auction? Is it based on your relationship with the underlying customer, or is it dependent on gold price? So, for example, let's say the gold prices come down by 20%, would you change your behavior? That's the second question, sir.
Okay, thank you. But I need to correct you when saying that we have never felt that gold loan business is not sustainable or growable. We are always bullish on gold loan. We always felt that gold loan business will grow. Why we took up diversification is mainly because these are our set of customers. Our set of customers need home loan. Our set of customers need a personal loan. Our set of customers need a vehicle loan. That is so that we can retain the customers with us. Is that we done. It is not that because there is no growth prospects in gold loan. So today when the going is not that good for non-gold loan business, we will certainly not aggressively grow this portfolio. As and when economy picks up and things move, because nobody feels that home loans or vehicle loans or personal loans are dead and gone. No, after some time when the economy picks up, it will come up. At that time we will grow that. Now just the time for not a time to do that. That is why. So correction number one is that we have never felt that gold loan business is not sustainable, and that is why we are going into other things. Number two, about the auction. Today we are in the money, so we always keep a track on what is the gold price and what is the realizable value. At any point we feel that the realizable value is getting closer to the due, we can either force the customer to take it or persuade him to take it or auction it. But then, having said that, we are now actually persuading all the customers to come and pay up the interest and renew the loan, and so that they don't lose the gold. So this is a practice which is actually very well perfected by Muthoot, and I think we are the masters in that. We have never had any issues on that side, so you can be confident of that. Thank you.
So fair enough, sir. So I stand corrected, and thank you for that. So you're saying there's no target. You look at each business in terms of the prospects and grow it accordingly. That's what they're saying, sir, right?
Yeah, right.
Okay, thank you, sir.
Thank you. The next question is from the line of Gaurav Kochar from Mirae Asset. Please go ahead.
Yeah, good evening. Thanks for the opportunity. A few questions from my side. Firstly, what is the renewal rate in 1Q, and has it fallen versus, say, last 12 months?
So, we have encouraged top-ups in a large way, in the first quarter because, especially when there are strains in terms of funding and there is a opportunity for customers who need more money. We have encouraged top-ups. There were special schemes for, giving more top-ups. So top-ups have been at a higher, but that doesn't mean that all loans got rolled over. It's just that those who need more money were given more money through the rise. As MD mentioned earlier, the average LTV on the portfolio is only about 54%. So there are so many customers who have not taken the full loan amount. There is always a mix of top-up customers and fresh customers in our portfolio.
Right. Sure. So there is no drop in renewal rate. That the right assumption? Hello?
Yeah, right.
Yeah. Okay, sure. And coming to the decline in the tonnage, I mean, the gold value or the gold tonnage that we have is declined by around 6 percentage points. So how do you explain that?
See, there is nothing to be explained. When the people need the same amount of money for new loans, they need to bring only lesser quantity of gold. That's what is happening.
It's a function of gold price.
Function of the gold.
The gold price.
The loan to value today is much higher than what it was 3 months back.
Right. So we have not seen cases of customer pledging more gold, given that the gold prices have gone up.
Yeah, because he need not. Today, if he wants 50,000 rupees, earlier he need to bring 50 grams. Today he need to bring only 40 grams.
But suppose if the customer needs 1 lakh, certainly he will bring it. So we don't track that part. We don't need to actually track how much quantity of gold someone is giving because everything is centralized.
Sure. And on the margins, we saw roughly 160 bps sort of spread decline. How much would you attribute that to the yields, the yields that have fallen? And any explanation to that?
See, as we said in the previous call, there have been higher level of collection because of the overdue interest in the previous quarters. I think 22% is a very reasonable rate which we should look at on a regular basis going forward.
Okay. So this sort of NIM would sustain. Don't see any sort of NIM improving from you.
At least for the time being, we should see a stable level of NIM. And we are generating about 6 to 8% of return on asset, which is fairly a good return for the shareholders.
Sure. And the last question is on OPEX. In this quarter, the OPEX in absolute terms was around 374 crore. Roughly the run rate has been around 500 crore. So going forward, given that business normalization has kind of happened, what kind of run rate shall we see on a quarterly basis?
The OPEX which has come down in last quarter was because of some places we got reduction in the rent from the landlord, but that is only for a month or so. After that, now everything is back to normal. The number of staff is the same. We have the same number of staff. Everybody is coming to the office. The premises are working. So advertisement expenses, everything is now started. So what you saw earlier as a reduction is not sustainable. It will be the average expenditure OPEX every quarter going forward.
Sure. So these would be back to pre-COVID levels.
Yeah. Correct. You put it correctly.
Sure. Thanks and all the best, sir.
Thank you. The next question is from the line of Deepak Gupta from Reliance Nippon Life Insurance. Please go ahead.
Hi, good evening, sir. Thank you for taking my question. So I just wanted to understand this correctly. As of March end, you had 176 tons of gold kept as security, which has come down to 165 tons. So what do you attribute this fall in gold kept as security for, given the fact that your disbursements, you have disbursed loans in the quarter and your loan book is flattish on a quarter-on-quarter basis?
We just answered this question 1 minute back. It is the new customers having a fixer, they come to the branch thinking that I want for 10,000 rupees or 50,000 rupees. For that, earlier he had to do six bangles. Today he needs to do only 5 bangles. So that is why the tonnage is lesser. So the new loans are because of the price is moving up. That's what.
I understand that, sir, but
See, every month, we are having about 6,000 to 7,000 crores of repayments, and similar amount gets dispersed also. So the repayments happens with a higher gold rate. Fresh disbursements happens with a lower quantity of gold. That is purely a function of gold price movement and what rate we are lending.
Understand, sir. And so it's basically that the fresh disbursement that has happened, that would have been largely to existing customers who have enough collateral with the company, and therefore he does not need to give further incremental gold.
And also, typically, a gold loan customer, very seldom does the gold loan customer come with a set of jewelry and ask, how much can I get? When they walk into our branch, they have an amount in mind. And with that amount in mind, they will accordingly give how much ever jewelry is required. So 9 out of 10 cases, the customer already has an amount in mind, and when they come to our branch. So very rarely do you find a customer coming and asking, what is the maximum I can get for this piece of jewelry?
Understand. And sir, my second question is on borrowing mix. I see that you have increased your commercial paper exposure in your overall borrowing mix. So it would be to take advantage of competitive rates in the last quarter. Do you see CP sustaining at these levels in terms of your total percentage of borrowing, or you think CP can grow as percentage of borrowing?
So our commercial paper rating has remained as 5,000 crores for the last 3 or 4 years. We have not changed. Since 2018 we have not changed it. So the last change happened from 4,000 to 5,000 happened in November 2018. After that we have not changed the proportion. So there is no change in the level of borrowing through commercial paper.
Understand. Okay. Thank you, sir.
Thank you. The next question is from the line of Nischint Chawathe from Kotak Securities. Please go ahead.
Hello, am I audible?
Yeah.
Hi. Hey, just trying to understand what was the reason for higher cost of borrowings on a quarter-on-quarter basis?
It's not material, but one could be the impact, the full impact of the ECB cost which we did on March 1st. So March 1st, 1 month cost only would have got added up. For this quarter the full impact would have come. So that is one, and it could be because of the averaging impact in the last quarter or in the current quarter.
But on the forex side now, how are you accounting the MTM impact? I believe you are hedged, but how are you really accounting for it? Is there any MTM hit on the forex side which is getting reflected over here?
So MTM hit is taken to other comprehensive income. It doesn't have a direct hit on the profits for the period.
Sure. And what explains the decline in derivative financial instruments? I think on a quarter-on-quarter basis it has gone down from 3,500 crores to around 1,500 crores.
So that is purely because of the movement in the exchange rate. That's what I said. Those fair value changes because of the foreign exchange fluctuations. It impacts the OCA as well as the balance sheet items of derivative instruments.
And your funding cost on the forex side is higher than the weighted average funding cost? I mean, the reason why it's impacting your funding cost?
Yes. As of now, the ECB borrowing cost is higher than the current borrowing cost.
And that would be by how much?
See, the first ECB transaction we did, the overall cost came in double digits. Second, we were able to, the overall cost was in single digits. And at that point of time, it was, the cost structure was slightly better than the rupee cost, but now the domestic rates have significantly come down. So currently the USD borrowing cost is higher than what we are borrowing in the domestic INR rates.
Sure. Got it. That was my question. Thank you very much.
Thank you. The next question is from the line of Alpesh Mehta from Motilal Oswal Services. Please go ahead.
Hi, am I audible?
Yes, sir, you can go ahead.
Okay. Yeah. So first question is, just hypothetically, if the gold prices were to correct by 15-20% from the current levels, would you be changing your AUM guidance, or the LTV will take care of the AUM growth? Since the tonnage growth is not happening and the new customer addition seems to be very low. So what's your sense on that? And the second two data keeping questions, what would be our average duration of the portfolio, and what percentage of our customers would be the repeat customers? Hello?
Sorry, could you repeat your first question, please?
The first question is, hypothetically, if the gold prices were to correct by 15-20% from the current levels, would you be changing your full year AUM guidance, or your LTV will take care of the AUM guidance that you have given? That's the first part. And what kind of a customer addition growth that you are seeing from the current levels? And other two are the data keeping questions. What's the average duration of the portfolio, and what percentage of our customers are the repeat customers? Thank you.
So whenever we give a guidance, we don't consider the gold price movement. So how it happens is, if the gold price increases, the customer may pledge a lower quantity of gold. If the gold price falls, the customer will be pledging more quantity of gold. Of course, there will be a certain portion of the customer base, who takes advantage of higher gold prices. Since considering all the three factors, we generally don't depend too much on the gold price factor. We generally give a guidance without taking into consideration a stable price scenario. So this 15% growth is something which we have guided based on a stable gold prices. This is something which we want to achieve. Of course, when the gold prices improve, certainly it is an extra boost on the entire business. But sometimes it has impact only the gold tonnage. And the second
just to relate it to this, so if the gold prices were to correct by 15-20%, so would you be confident that the LTV will take care of your AUM growth guidance right now?
See, based on the experience, that's what we have seen. If you look at, as we said earlier also, the average LTV is only 54%. So all customers are not depending on the higher gold prices to borrow. So some customers are willing to pledge more gold. Some customers are willing to want to have borrow more. So it's always a mix. So we cannot go deeper into it and give a projection. So we assume that 15% growth is something we want to achieve on a stable gold price scenario.
Okay. And
in terms of the duration, the average duration, again, it remains 3 to 5 months only. You can see that from the disbursement numbers which we have provided in our presentation. Third point on the repeat customers, certainly the repeat customers are more. We should assume that 80% are or more of repeat customers, but that doesn't mean that the same customers is rolling over the loan every 3 months. Some new customers, existing customers who were not having a loan earlier will come and take a fresh loan. By that time, some of the existing customers will exit. So if you look at the current, the last quarter, we almost, though there was a decline in the portfolio, we have seen about 4% of the customers, the customer base, they are actually new customers who have taken a loan from us, even though there is a dip in gold loan portfolio by about 300 crores.
Now, please also understand that repeat customers doesn't mean renewal customers. Repeat customers means somebody has taken a loan, he has taken back the loan after 1 month. After 3 months, he wants a loan again, he comes again. That is what we call repeat customer, because there is no entry loan and exit loan. So people take loan and because the interest is also on the actual number of days. So whenever he has the money, he takes it back and he knows, if I want it after 2 months, in 10 minutes time, I'll get the loan. That's it. That is what we call as repeat customers. Customers coming again and again for loan, not renewal customers. I just wanted to correct that.
Perfect. And what percentage of our customers would be at around 75% LTV, the peak LTV right now?
No, first of all, LTV is moving to us. as on a day, maybe 10% or 20% of the customers only take the maximum LTV, because we have different schemes. We charge lower interest for customers who take lower LTV. For somebody who is taking a bigger loan, we have a lower interest rate. All those things are there, permutations and combinations there. As Mr. Uman earlier said, it's not that everybody takes the maximum value. If you really want maximum value, they'll go to the jeweler and sell the gold. That is what the fellow who is very much interested in the maximum value, he will go and take 100% from the jeweler instead of taking it as a loan. Why he is taking the loan is because he feels sure that he will get some money from somewhere and be able to take back the gold and give it to the family. Thank you.
Great. Thank you. All the best.
Thank you. The next question is from the line of Pratik Agrawal from ASK Investments. Please go ahead.
Hi, sir. I have a simple question. Just try to be a bit humorous here. NBFCs can do personal loans and make some losses. They can do vehicle loans and even small homes and make some losses. Why is it, as a part of business, of course, why are regulators so protective towards gold companies? Why is the decision on LTV not left to the judgment of the gold company?
Actually, we have not understood your question, sir.
Sir, what I was asking is, if NBFCs are allowed to do personal loans, vehicle loans, small home loans in every category, where there is an ability or a propensity to have losses, and, even microfinance. Why are they so protective towards gold companies that, they have to dictate a LTV and ensure that zero losses are made? Should be left to the judgment of the gold company.
Yeah, I agree, sir. I think you should also come with us once to meet the RBI. You should come with us. We also sometimes say why only we should be restricted. A car company can do 100%. Personal loan, he can do what he likes. I agree with you, but I don't think regulators understand that. Anyway, it's only on the lighter side, sir.
Yeah, that was on the lighter side, but then you represented for equal treatment versus banks. So what happened to that? Any update?
Been dealing with our Reserve Bank also. They don't take quick decisions. They take their very considered decision after long thought. So we'll wait for some more time for them to come back with a response. It's not that you send a letter today, tomorrow. Unless it is a rejection, it will take some more time to come. If it is a rejection, it will come in 1 hour's time.
Okay, understood. Thanks.
Thank you. Thank you, sir.
Thank you. The next question is from the line of Kunal Shah from ICICI Securities. Please go ahead.
Taking my question. Firstly, in terms of, are you seeing banks reacting to this rising LTV and any of the locations or any particular banks, regional banks, reacting to this in the early phase? Definitely it's quite early, but have we seen any kind of a reaction from the banks, or they are still holding back?
If I was the chairman of some of these banks, I wouldn't give 90%.
Okay. So it's not really happening is what you are indicating. And secondly, in terms of delays, obviously you highlighted that we are well covered in terms of the collateral. But what could be like in terms of our proportion of customers, how much are not actually repaying? We are seeing the trends in terms of the disbursements and the collections given on a average monthly basis. There is some decline. So is it like fair to assume that whatever is the difference, that those are the customers who are not repaying as of now?
So the question can be answered by saying how much of gold had to be auctioned. So last year, we would have lent about 100,000 crores of gold, and we would have auctioned about 500 crores of gold. So that is the point. 0.5% is what we have to auction. We would have lent 100,000 of gold and finally had to auction only 500 crores of gold. So that is the number of people who are abandoning the gold.
Thank you. Kunal, we would request you to please come back in the question queue for any follow-up questions. The next question is from the line of Vaibhav Sachatia from SNI Investments. Please go ahead.
Yeah. For providing the opportunity, I had a question from a longer term perspective. We have seen that in microfinance sector there's a cap of I think around 10% over cost of funds in terms of lending rate. So do you think any such move in gold? In other words, in my assessment, it's such kind of thing comes in our sector as well. Gold loan, it would be beneficial to Muthoot. So why don't we just go and speak to the regulator to do such kind of move as well in gold loan particularly?
We would request our participants to please stay connected as the line for the management got disconnected. Thank you for patiently waiting. We have the management reconnected. Vaibhav, you would request you to please repeat your question.
Sure. So I was asking a question from a longer term perspective that I think if there is a cap on the lending rate, which is like which in the same model is what is there in the microfinance business. Why don't we go and pitch to the RBI to have the similar kind of a cap in gold loan business as well? Do you think it would be beneficial for us? Because in my assessment, I think it would be beneficial for us.
Anyway, we'll discuss it internally and probably take a decision on that, whether to go to RBI and talk about a cap of interest, etc. I think we'll have to take an internal decision on that. We heard you. Right, thank you.
Do you think it would be beneficial for Muthoot?
I don't think we need to comment on that now. Those are all speculative questions.
Okay, no problem. That's it, from my side.
Thank you. The next question is from the line of Sivakumar K from Unifi Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, can you give us the incremental LTV at which you are issuing loans currently? Basically, I want to know whether you have tweaked the LTV in response to the RBI regulation. Thank you.
So we are strictly following the RBI norms of 75% of the last 30 days average gold price. That is the maximum LTV we can give, and all AGLOC members are following that practice.
AGLOC is Association of Gold Loan Companies. All members follow that. We have a daily rate and nobody gives any rate more than that fixed rate of 75%.
Okay. Sir, the second question, just wanted to understand with respect to our subsidiaries, we have made a provision of 32 crores in Q1. Do you anticipate similar kind of provisions for rest of the quarters in this year? If you can just comment a bit on provisions in each of the subsidiaries and what's the outlook for rest of the quarters from a provision perspective?
I think the provisions in the subsidiaries were mainly because of the moratorium given. When you give a moratorium, you have to give a provision. Actually, we were little more conservative and give more provision for those loans which were given moratorium in the vehicle finance and microfinance and home finance. That is why it's a provision. So whether it will be there in the next quarter, we don't expect a big increase, but then we'll have to see how things are coming up by end of next month, end of September, if things require a provision. But as it looks, I don't think we may need additional provision, but if there is required, we'll do it.
Sure. And sir, with respect to our microfinance business, can you comment a bit on how our book is doing as compared to broadly the industry? Is our book doing better? And if you can, or worse or same as industry, if you can comment a bit and quantify a bit.
We have an AUM of 2,600 crores. In terms of collections, there were some presentations by the department. They say that we are at the better end of the collection. As I said, last month the collections were July was 76% for our company, but at the same time there were some companies at 40% also, and the average is also something like 60%. So we are at the better end of the spectrum as far as collections is concerned.
And sir, in terms of disbursement, have we started disbursement in all the microfinance branches, or we have been like selective? If you can comment how the disbursement plan is going forth.
Selectively, we have started disbursal. We have disbursed to the 100 crores also in the month of July. And that's again good customers. We are looking at our own existing customers and looking at their repayment track record, including whether they have availed moratorium. That is the factor we are looking, and we are slowly started disbursing. That's it. We are careful.
And sir, disbursal in CV and home finance, any guidance on when would you start disbursing again, or have you already started? Can you comment a bit?
Actually, I had commented on that in my opening remarks. That is, in the last quarter, we have not done disbursals in housing finance as well as the CV sector, and we will wait for the September moratorium to actually have its impact and play after August and September. We say how the customers are reacting to this after the moratorium is over, and generally go forward with the new lending, selectively new lending, both in home finance and the vehicle finance.
Thank you. Sivakumar, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. Also, we would request the participants to please limit your questions to 2 per participant. The next question is from the line of Kiran Engineer from Motilal Oswal Financial Services. Please go ahead.
Yeah, hi sir, congrats on the quarter. I just have one question. So I understand that our gold tonnage has gone down because prices are up, but the number of accounts has also gone down QOQ. So is this a phenomenon you're seeing where they're taking back the gold and selling it off rather than keeping the loan account continuing? Or does this concern you?
So, as I said in one of the previous questions, during the quarter, though there is a dip of about 300 crores in gold loan AUM, we actually saw about 5% of the customer base, new set of customers have come in. Even if you look at last year also, though we achieved at 22%, we actually saw about close to about 27% of our customers' loan accounts were new customers. So, because it's a pure retail, there will be a lot of cases where customers are close their loan and has not come back again because he doesn't have a need. But another set of new customers is coming and taking a loan. That's the way we should see it.
Okay, because I mean, on a net basis, your accounts are down 5%. On a gross basis, they're down, 5 plus 4, 9%. So in one quarter, 9% of your customers are attriting. I don't know, is this normal generally? Is this business as usual? In terms of attrition rate of customers. I understand that disbursements were muted and that's why AUM is down.
So the loan account numbers keep varying. We always look at whether we are able to generate a new customer base. So the new customer base is certainly been increasing. Last year also we saw that the new customer base is increasing. Because it's a pure retail, some customers may need a higher level of loan, some customers may not need a loan. So that keeps changing.
To answer your point, nothing unusual.
Thank you. Kiran, we would request you to please come back in the question queue for any follow-up questions. The next question is from the line of Anand Lata from HDFC Mutual Fund. Please go ahead.
Hello.
Yes. Yeah, please can hear you.
Yeah. Sir, if you can give some color on the different schemes you have in the gold loan, like how many different schemes you have for the customers, and against each LTV, how much is the rate of interest charged?
So, Anand, the details are also there in the website, but to give a broad view, there are so many schemes which we have created over in the last couple of years. There will always be some portfolio outstanding in each and every scheme. But a basic principle is that we have a scheme for 75% at X rate. Sometimes we have a 75% at Y rate also, depending upon the geography. So the number of schemes are keeps varying according to geographies and according to the LTV also.
We actually need to give choice to the customer. Some customers are interest sensitive. Some customers want more money. Some customers need only very little money. Some customers need large amount. So in every case, there is some difference. If a large loan means we can offer a lower rate of interest. If a smaller ticket size, we give a higher rate. If the LTV is higher, we give a different rate. So we have at least probably 10, 12 schemes are always there.
Okay. So what is the lowest rate of interest we give to the customer and what is the highest rate?
Our rate, the lowest rate should be 11.9%, that is 99 paisa, and the highest rate should be in the region of 23%.
Okay. And so what proportion of our customer will be at loan book will be at lowest interest rate?
It depends also, but our average yield comes to 21%, so I think that should answer the question.
Thank you. Anand, we would request you to please come back in the question queue for follow-up questions. The next question is from the line of Vikas Agarwal from Bank of America, Merrill Lynch. Please go ahead.
Hi. Good evening, everyone. Just a couple of quick questions from my side. First, you mentioned earlier in the call that there were some customers who had not paid after 12 months, and instead of auctioning, given the LTV, you have not auctioned the gold. Can I check two things related to that? One, is there any increase in amount disbursed to them just given the headroom in the gold collateral they have? And what is the proportion of customers, either as a number of customers or number of the proportion of AUM that you have? So that's my first question. And second is, if you can also share some color on the debt maturities or liquidity requirement for the remaining 9 months of FY21.
Thank you. The customers who are more than 12 months, I think we call it the NPA. It's about 2.5% or about 1,000 crores. All those customers today, we are in the money actually. They're in the money means if we auction that gold, but then we are giving little more time to the customer. Suppose he is able to salvage his ornament, we would rather give it back to him. So that is our policy there, and we have not had any loss, etc. because of that. And that has been one of the reasons why customers still keep coming back to us, that we don't mind having 1,000 crores as NPA and not recognizing the interest also in our books and still maintain a healthy profit, so we can afford to maintain that NPA and be rather customer friendly in not auctioning the gold very quickly. That is really our principle, and we have not we only gained by that customer comfort, and also we have not lost anything financially because of that. The second question about borrowing, I think CFO can answer.
So
6 months, how much of money you have?
So see, our primary major short-term borrowing is on account of commercial paper. So as I said, 5,000 crores is the CP limit. So every month about 1,500 crores will be maturing. That is a major repayment for the next 3 months. But definitely we are hopeful about placing fresh CPs and raise fresh money, because in the past so many months we have done that exercise, and certainly the market is confident about our credit. Second is on the borrowing from banks. We have working capital limits from banks. Mostly it is for a short duration, though it is a regular limit. So these loans are taken for 3 months, 6 months. So it keeps maturing, but we are able to draw it again after a cooling period of 1 or 2 days. So that forms another thing. Other than that, we don't have any major repayments, at least in the next 6 months.
Thank you. Vikas, we would request you to please come back in the question queue for any follow-up questions. The next question is from the line of Utsav Kokirwar from Investec. Please go ahead.
Thanks for the opportunity, sir.
Just a couple of questions from my side. Can you just help me with the collection efficiency number for the other two segments, that is home finance and vehicle finance for the month of June and July? And second question is with respect to the legal and professional charges, which are doubled on YOY basis. So I just want to understand why it has increased, because we have not done any auctions or anything. So just need color on that part.
So what was the second question?
Legal and professional charges actually more than doubled on a YOY basis if you look at expenses.
No, periodically we engage for various persons for various services. So that could be maybe a one-off item. That could be for one of the professional charges we have engaged, because at various points in time we for fundraising, etc., we might use some consultants, etc. So probably it is because of that. The other one was on the collection efficiency in vehicle finance and home finance. See, as we said earlier, there has been a significant improvement in terms of the collection month on month. In fact, for housing finance, it has almost reached 87% of their scheduled collections in the month of July. So for vehicle finance also, it has almost reached 75% of their scheduled collections in July. So every month we are seeing improvement. So we are hopeful about that. Things will stabilize in the coming months.
Thank you. Sir, we would request you to please come back in the question queue for any follow-up questions. Also, we would request the participants to please limit your questions to one per participant. The next question is from the line of Sakshi Goenka from Alchemy Capital. Please go ahead.
Hi sir, thank you for taking my question. I just had one question. So your presentation says that you're getting an excess provisions of 295 crores, sir. So what do these provisions are linked to, given that you have such a big asset collateral? I just wanted to understand, what are these excess provisions for?
So, at the time of transition from the old ICAP to Ind AS, there is a provision which was excess. The provisions which are carried as a part of Ind AS was lower than what was already there in the balance sheet. So the different provisions we carried in the balance sheet as excess provision, primarily for the reason that we were not clear in terms of what RBI is going to stipulate in terms of the provision requirement. Some clarifications have come in the month of March, but since we are expecting some more changes in future, probably we should keep those provisions we made in the past as excess provisions in the balance sheet. Right now, we are not planning to use that. We intend to keep it as a excess provision.
So, sir, despite you having your collateral being so strong, you still think that there is no question of writing back these provisions? So you will keep it in your books?
See, these were provisions that we created in the past. So, we felt that let's not bring it back to P&L. So currently we are retaining in the balance sheet as excess provision. Probably in case RBI, because that RBI is still insisting on comparing the old RBI provisions as per RBI norms as well as under the Ind AS, and the differential, if there is any shortfall, it is carved out of the reserve. So, tomorrow if RBI is going to make any changes, we can certainly use this excess provision for utilizing that.
Thank you. Sakshi, we would request you to please come back in the question queue for any follow-up questions. The next question is from the line of Arvind Shetty from Max Life Insurance. Please go ahead.
Yeah, hi sir. Thanks for taking this question. So based on the demand that we are seeing, do you plan to open any new branches during the year?
I think I had answered, somebody has asked and we had answered. We plan to open about 250 branches in the next 12 months.
Okay, all right. That's it. Thank you.
Thank you. The next question is from the line of Abhiram Iyer from Deutsche CIB Center. Please go ahead.
Yeah, first of all, congratulations for the result. My query is regarding the cash balance that you carry. It's obviously 3 to 4x the amount of cash that you carried some in the previous year. So is there any plan for, early retirement of debt or early retirement of bonds using this cash?
So this excess cash is for shoring up the liquidity buffer we required for our growth, and especially in future, RBI is going to bring the LCR coverage ratio. So necessarily our balance sheet has to keep this kind of a liquidity going forward. It is a part of our going to be a part of our business model going forward.
Got it. Thank you.
Thank you. The next question is on the line of Subhranshu Mishra from BOB Capital Markets. Please go ahead.
Hi, sir. Thank you for the opportunity. Two questions. The first one is, it seems very counterintuitive in the credit crunch environment. Still, repeat customers are 80% and new customers are only around 20%. So if you can expand on that, that's the first level question. Of course, you've answered the excess cash, but we are roughly sitting at around 15% of the balance sheet. And now the bond markets are thawing, and almost every rating of NBFC is getting money because of the liquidity at PSU banks. So why is it that you're sitting at such high levels of cash liquidity? I mean, we can reduce it to around 10%, or maybe 8 to 10%. So if you could expand on both these questions.
See, no, I don't know how many NBFCs are looking at growing the balance sheet. We have already guided the market for about 15% growth. So certainly we require funds to grow our balance sheet. In addition to that, we have to ensure that there is adequate liquidity to take care of any sudden uncertain events that might crop up in future, maybe because of the COVID or because of any other kind of a liquidity stress scenario. So as I said earlier, it is going to be part of our business model to have excess liquidity in our balance sheet.
So sir, excess means how much of excess? I mean, why is it 15 and why not 10? That's my question.
It has to keep. It will certainly keep varying. We don't want to say it as a policy, but certainly we'll have to maintain about 10% of the balance sheet minimum as a liquid cash.
Thank you. Due to time constraints, that was the last question. I would now like to hand the conference over to the management for closing comments.
Managing Director George Alexander here. We as a team here in the head office Cochin, very happy to have had this interaction today. Happy that all of you were able to understand more of the company through our interactions. Definitely thanking all of you for the great support you have given till now, and requesting your continued support in future also. Wish you all the best, and since you are from Kerala, wish you all a happy Onam. Onam is coming next week. Wish you a happy Onam. Thank you.